Hey everybody, welcome back to another episode of Green Spud Trades. And today I'm going to be highlighting another stock that caught my interest. It's called Iron Mountain, ticker symbol IRM. So let me take you to the chart and I'll show you how this got attention on my stock scans. All right, so here is the Iron Mountain chart. And okay, it's working. Okay, yeah. All right, so here's the Iron Mountain stock chart. And it was on, what day was this? I think it was this day, February. Yeah, it was mid-February. This stock, it hit a new 52-week high, and it ended up on my scan here on, I think it was this candle, the top. Yeah, it hit a new 52-week high there. And this was a little bit of a breakout right there after the earnings report. And look at the volume there. There's a nice volume candle. And then when you back out the daily chart, you see that I had this downtrend line there because I was watching this for some time. It not only broke out to the new 52-week, but it also broke this downtrend line. And I drew a new downtrend line here to see if it breaks out through this level as well. But a lot of times, this is the type of setup that I really like, these trend line breaks, because a lot of times if you get a volume move breaking out from one of these trend lines, then you get a continuation. And a lot of times if it's with an earnings report, that's usually driven by fundamentals, and then you could have the larger whales in there buying it, which is why you get the volume. And that's sort of technical setup that I like and tend to look for. So what does Iron Mountain do? I said Mountain Dew. So what does Iron Mountain do? And why is the stock so interesting? Well, it's a pretty cool business. They're in the document manage. They're well known for doing document management for a corporation. So I don't know. There's a lot of you've probably seen in a lot of companies they have boxes that have Iron Mountain labels on them, and Iron Mountain, they could take these documents off site for storage or for shredding or whatever the business wants to do with them. Okay, so let me bring up, I could show you exactly what they do because they have a lot of interesting published stuff on their YouTube channels to kind of give you a sense of what they do.
Environment. There's simply too much at stake to handle retirement.
Oh, okay. So this is about their data center business. So Iron Mountain, they're really well established in the document storage and scanning and shredding, but the really high growth component right now is in data centers. And when I looked up what this company is doing and what has been driving their growth more recently, they are a beneficiary of AI and the whole data center build out. So it's a very technology oriented company, which is actually unusual for a REIT. This is a real estate investment trust. That's how they're categorized for their accounting reasons. But it's a very technology oriented business that they're in. And data centers, which they operate, they have a whole division that operates data centers. It's part of their overall strategy. That's a key part of their growth right now.
Devices and the data they contain poorly. The problem is, disposing of retired technology assets like mobile devices, laptops, printers, scanners, and servers, let alone decommissioning data centers, is a major headache. If even one hard drive goes missing, your security is at risk. At Iron Mountain, we believe every company deserves a comprehensive, maximum security chain of custody for every asset. That's why companies trust us to safeguard their critical information and retire old IT assets securely.
Okay. So, see what makes this business interesting is they both manage the data centers. So they have data centers that they could sell by the megawatt of capacity. They rent out the capacity inside the data centers that they own. But they also manage all of the stuff that goes inside of the data center. They, the parts and stuff like the server hardware, the hard drives and stuff like that. They help. It's called asset lifecycle management, and there's a whole set of laws and compliance around disposing of those sort of things, and that's what Iron Mountain does, and it's a rapidly growing part of their business. So, like for example, if you have a hard drive in your data center, there might be something on it like protected health information, things that are subject to rules like HIPAA or the GDPR law in Europe. There's also it's called PCI DCS. It's a payment card industry standard, and that's kind of like a HIPAA law for finance. You have to dispose of your hard drives in a particular way to make sure that that data doesn't get into the wrong hands. So the hard drives have to be wiped. And then not only that, but if they're going to dispose of like old assets, they have a salvage value and they could be resold on the market. And Iron Mountain helps companies that own the stuff in the data center get rid of those assets as well. I mean, e-waste is a big thing. Like, I've got this box in my garage of, old computers and lithium batteries and stuff like that. It's really hazardous stuff. And imagine how much of it is inside of a data center. And, they can't just dump that stuff into a landfill. It has to be disposed of in a particular way. So I think that's a pretty solid business. There are a few companies that do this stuff. It's kind of a fragmented industry, but Iron Mountain is a leader in this industry. They're one of the bigger players. And here, this company's Securus. It's actually not Securus is not traded on the U.S. markets. But here I found on the website, they give a list of competitors in there. And one of the ways that data disposal and IT asset disposal can be differentiated is with the contracting terms. So a lot of these players, like let's say like Dell or HP, they might have IT asset disposal contract with the company, but they might lock in terms such as a length of how long they have to have the contract, or maybe even require that certain hardware be purchased from that company as well. So that's one of the ways that they could differentiate among that, is by having different contract terms with different companies. And it's also important to note that although this is a very fragmented industry, there's consolidation going on, and Iron Mountain has been making acquisitions in this space. So they've been growing it that way as well, getting smaller companies. And this company has the expertise, the expertise to handle it a certain way, and do all the compliance stuff and the sort of things that are hard to build up as a differentiator. They got a moat, essentially.
Iron
another one of the
Mountain helps to
videos.
protect your organization and reach your sustainability goals every step of the way. We connect your assets to their next use, helping you deploy, retrieve, and manage them with ease and at scale. Retired devices get a second life, activating new value, maximizing ROI,
So
and
there,
lowering your
this
total
one's
cost of
talking
ownership.
about the asset
Go further by
disposal
making
aspects.
your hardware work harder with Iron Mountain.
What else? Okay, so now here's like their data centers. They've got a big data
Welcome
center
to
that they own in
WPA1, Iron
Pennsylvania.
Mountain's crash-resistant gates, 3-factor access controls with biometric functions, man traps, campus-wide CCTV, and on-site Iron Mountain armed security officers. WPA1 is part of our global data.
Now, I think, this is one of the things that I think is really fun about researching stocks is you get to find out about businesses like this. This data center has an underground lake because it's an underground data center. And you know how, like, one of the issues with data centers is the water consumption. Well, this one, they get the water directly because it's underground. They I guess have like a pipe going into this underground lake, and they recycle the water inside of the lake, and they use that to cool the equipment inside the data center. Here's another video that they got on their website with their Pennsylvania facility. One of the big contracts that Iron Mountain has is with the government. They have a $150 million contract with the Treasury Department for document storage and also scanning documents. So they take all these government documents and they put it here in this secure facility. It's a really takes a lot of capital to do something like this. So here, this room here, this part of the video, they're showing you their scanning room where they're converting documents into and they're scanning them into the computers and such. And yet another business line that they're getting into is something called dark data. That's what they refer to it on the conference call. Let me see if I can find that dark data reference. Yeah. So this is another area where this company stands to benefit from the whole AI thing. So they own the data centers. They help with the management of the stuff in the data centers for companies, even data centers that they don't own. And then with the document storage, they've got this other product for AI, helping companies find stuff inside of the document. So basically they scan it and then they have their products which use metadata and agentic AI to help the companies make use of old documents, basically. All right. So here they're just kind of talking about that here in this video. Going back to the chart now. If you notice, back here is starting in October, you have this period of time where it hit the high and then it retreated. Oh gosh, that looks like a good 40%. Yeah, that's about a 40% pullback from the high. And then it's spent most of last year consolidating, and it looks like it might be ready to break out again. So I think one of the things that went wrong with it last year is the Doge department in when Elon Musk was running that for the government, because there was a threat to the to the government contracts that they have.
Where the United States federal government stores and processes retirement applications. Here's how Elon Musk described it.
There's a limestone mine where we store all the retirement paperwork. And you look at a picture of this mine. We'll post some pictures afterwards. And this mine looks like something out of the 50s because it was started in 1955. So it looks like it's like a time warp.
Okay, so basically what happened was this facility that Iron Mountain was managing got under the scrutiny of Elon Musk and their team. And even though, like, going into the Liberation Day, as you can see, that's where it bottomed. Even though a lot of stocks got hit during that time period, I think one thing unique to this stock getting hit was that they had that government contract that was under scrutiny, and having government business and then the government efficiency department comes in, it's probably a concerning thing for shareholders. And so I think this one got hit uniquely hard during that time period. But I don't know. It seems like they've been able to move past that now. And I guess it didn't happen. As far as I could tell in the news, they didn't scale back on anything there. So it's probably safe. Okay, so let's look at the finances a little bit. They did $6.9 billion in revenue last year, and they've been steadily growing between 8 and 12%. I'm going to get to the investor day or the quarterly release presentation in a moment, because a lot of their growth is driven from the whole data center business and the asset lifecycle management business. So on the earnings conference call, the CEO stated that a few years ago, 90% of their business was document storage and document storage management. But now that core part of their business is only 70% because the data center related stuff has grown so much, it's becoming a larger share of their revenue. And they're profitable. Let's see, net income growth is going down a little bit. So one of the things, so I guess they've been investing a lot. Let's see here. Operating income is still going up. Interest expense, okay. It's a profitable business, though. And because they're a REIT, they have to pay out 90% of their funds from operations to shareholders and dividends. So you do get a nice dividend with this stock. Their revenues are broken down into storage rental, which includes the traditional business. That was $4 billion for 2025, and then the $2.8 billion is the $2.8 billion is from the digital related stuff, data centers, lifecycle management. Both divisions are actually growing pretty well, but with the assets, the digital stuff growing better. An interesting thing about this is that they recently completed a stock repurchase program. What is it? Darn it! I lost the consolidated statement. Deficit. Where is it? Okay. So they recently completed a stock repurchase program. And because of the stock repurchases, they have a negative shareholder equity. And I'll have to do a little bit more research on this, but I think that might limit the amount of further share repurchase programs that they could do. But still, you're getting a nice 3% dividend from this stock. Right now it's at 86 cents per share per quarter. And they've been consistently raising this over time. A few years ago it was at 62 cents. So that's a nice aspect of this business as it grows, you're getting more of a dividend. All right. And I'm going to show you one more thing. Oh, it's in another window. Here's a slide deck from their earnings conference call, the most recent one. Look at that growth. $4.5 billion in revenue in 2021, and now they're at $7.7 billion. Their guidance is a lot higher. Yeah. So the digital stuff, as I said earlier, it's at 20% of the revenue, but they expect that to grow to be an even larger share of your business. As AFFO grows, so does your dividend. Here's different divisions that they have. And here's their guidance. They expect the trend to continue. And then here's their outlook. And here's a quarter four results from last year. The year-over-year change in the quarter. Here's where they break out the data center specific stuff. I think corporate and other probably includes the asset lifecycle management, ALM. But you see here their core business grew 8%, but this new stuff grew 37%. Corporate grew 52%. And here's guidance. All right. So let's take a look at kind of like what the analyst forecasts are for this and see what the PE ratios are. That's interesting that not a lot of analysts are covering it right now, that a few analysts have dropped off. We went from 7 analyst coverage down to, what was that, 4? I wonder why they left. But anyway, it generally has a buy rating. You can see here they've been upping the price targets. And here's the interesting thing that I think is interesting are the forward PE ratios. pretty steep. For 2026, it's trading at a 45 PE. Remember, the stock that I did an analysis on just before this, Cognex, that was trading at a 39 PE. So, looking at this chart, you might want to say that, well, it's had a good run. If you caught this thing back in, what year is this? 2020. That would have been the time to get in on this stock, and maybe it's made its move already. Maybe all that growth is already known, it's already factored in. Well, I mean, that might be true. But I think to a large extent, these, stocks going up or down are really propelled by the hype cycle. And that's why I like to look at technical indicators. So right now, the overall market is kind of down a little bit because of the, especially when you look at what a lot of these AI related and these tech stocks where they've gotten kind of overextended. This one's been holding up pretty well. But anyway, I think if the hype cycle returns and we have a reinflation of the AI and data center theme, this one probably has a little bit more room to run. And that's what I find appealing about this stock and the technical setup. So considering that many of the other stocks that benefit from the whole AI and data center trend are that they've been kind of knocked down, a lot of them, and then like when the service stocks, like the software as a service stocks, are doing very poorly right now. This one's holding up pretty well, considering. So I think it definitely has some institutional interest. You get a solid dividend, so you get paid 3% to wait. All right, so that's my pitch on Iron Mountain. Since I'm here doing a live stream, maybe we could take a look at what some of the other interesting stocks going on. See what's going on. Get prepared for next week. So looking at the SPY, I noticed this forming that we've got this kind of a rounding of the top. I don't know. To me, that looks a little bit bearish. And I think the stock market has more to fall in general. I'm trying to keep a lot of dry powder in my portfolio, a lot of cash. I do have some Iron Mountain, though. I'll show you my buys here. Move it over. Yeah, so that's where I've been buying. If it dips, I might buy some more. But I'm pretty happy with the position that I've got right now. Create a note on that. Yeah. So I think for the stock market, for the bull market to continue again, well, for one, this Iran war situation is causing a lot of uncertainty. And especially the way that traded on Friday, it just does not look promising. I think the overall market has more to fall. And I think a lot of that depends on how badly the Iran situation is going to go, if it's going to wrap up quickly or not. but the longer it drags on, we might see more of a bear market. But also, we got a really nasty GDP number. What was it? GDP. Second estimate came out. We are teetering on the edge of recessionary conditions here with a Q4 number of 0.7% for 2025. It's interesting that quarter three of 2025 had really strong growth according to the reports. I'm not really sure how accurate they are anymore, given the sort of pressure that they're under to report numbers that look good. Could the data be trusted? I'm not really sure, but this, even if they tried to doctor this, 0.7% doesn't look great from a macro perspective. And then the non-farm payrolls was down 92,000 last week as well. So with the U.S. economy heading into what might look like a recession, maybe that's not a good thing for maybe that's not a good condition for a bull market. Anyway, that's kind of my thoughts right now. Just sit on the sideline, T-bill, and chill. Anyways, I hope you found this video to be interesting. If you liked it, give me a like and subscribe to my channel. And I'll see you in more stock